The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the Thirsty Thursday, the January 30th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hey, we can't do anything about yesterday or even a minute ago, but we can about the present, and we certainly can about the next minute. Hey, thanks so much for joining me here today. It's a great privilege to be with you, and this is a call-in talk show, or we've changed it to as well a email talk show. But you can give us a call at 877-927-6648. We'll take a look at whatever instrument it is that you are holding or looking to get into, give you our thoughts on what the charts are communicating to us. If you can't call in, well, we've got you covered there. You can send me an email, steve@tfnn.com. Inside that subject heading, if you'd be kind enough to put radio show question, and of course in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Thirsty Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all indices in the red. Let's take a look at them. You've got the Dow trading down 169 points, S&P off 23, NASDAQ off 61, Russell down 16. Everything down about a percent or less, with the exception of the transports. They're down 220 points right now. They're trading out at 10,684. Spot volatility is up 8%, up $1.35, trading at 17.74. Gold is up $14. Silver 51 cents. Light sweet crude back $1.58. Natural gas down by another almost 6 pennies out there, and bonds up by 1 full point. Leading the charge dollar-wise to the upside, it is Tesla up $63, 11%. Big move there. ServiceNow up $23, 7%. Khaki International up $12, 4.5%. To the downside, it is Sherwin-Williams painting the town red off $26, a little over 4%. Booking Holdings 25 and change off 1%. Aspen Technologies down about 15% or $20. So plenty to look at. Of course, I want to look at what you want to look at. No requests so far. I've just been following for the last few minutes, maybe a little chatter in the Tiger's Den. And, last comment I saw, maybe prices pushing lower with less energy. Well, let's go take a look. Let's take a look at one of our market analyzer tools that subscribers see. Of course, I continue to update this with additional, really putting together the tools that you and I take a look at to analyze the chart here, and now getting all those into a scanner so that we can start to really look for symbols or signals that are identifying tops or bottoms. Now, this that we're looking at right now is looking at various futures contracts, and we're looking at a 30, a 120, and a 300-minute or 5-hour time frame. And here on the 30-minute chart, so for example, with regard to what's the message coming from the 30-minute time frame, we can take a look at its Rhodes Momentum Indicator signals. We can see that the Dow, YM, ES Mini Russell 2000, each have Rhodes Momentum Indicator tools. This is saying prices moving lower on this time frame, doing less relative energy out there. If we look for either Td9 Count top or bottom patterns or Chapman wave counts, you can see where we're at there, both to the upside and to the downside. You can take a look at Stevie's green or red line level resistance out here, so you can see where those areas are. And you can also take a look at any Taz market profile support or resistance. The 120-minute time frames for these same instruments. Now we're just taking a look at the equity futures. They've also got bottom signals. And on the Russell 2000, you can see its 5-hour time frame also has a Rhodes Momentum Indicator bottom signal out there. There's various other things. But first, because we do have call-ahead seating, and we put our money where our mouth is at. That means we're going out to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you today?
I'm doing good, Steve. How are you?
Very good. Thanks so much for asking. And it is Micron, I believe, that you want to talk about. So tell us how I can help you.
I was just looking to see if where the bottom might be in Micron. I've got a small position in that, but
Okay.
I'd like to add to it. and I don't want to add till there's a sign of strength or something, but just wondering what your analysis of it was.
Sure. So in the case of Micron, and this is the daily time frame, we'll just start with it. Is there a time frame though that you use when you're trying to, take a trade or get into a trade? Is there anything specific that you might be using, Jim?
I usually use short-term time frames just for trading, and this is a trade, so.
And would a short-term time frame be 30 minutes or 15? What would be the short-term time frame?
Yeah, 30 minutes to 4 hours, and some.
Okay.
But this one, I was looking at possibly making it a longer trade because I believe long-term it's going to be pretty good. So.
Okay, so here's what we know, and we'll just take a look at the daily time frame. And the daily time frame shows that price was moving higher, doing less relative energy. Now, for my purposes, in order to confirm that pattern, we need to see some type of bearish reversal candle. That actually took place on Monday when price gapped to the downside. So this has confirmed that topping signal out here. And what this says to me is that if you're asking me where is the ideal buy area, well, the price point that I would give you is 46.43. Why 46.43? If we take a look at using one of the tools that we use, our Td9 Count Pattern, that's where we have 9 consecutive closes, in this case here to the upside, where each close is above the close 4 bars earlier. What it does, it really helps to establish an area where price had broken out. And that's at the price point of 46.43. Now, if price is moving back there, you also want to take a look at what kind of bars are moving into that area. Is there any kind of pattern that is forming? Ideally, you'd see maybe wave number 7, that would be letter G. Maybe you'd see the TD9 count to the downside out there. Today could be or should be bar number 4 of that. Something maybe an A to B equals CD, which could create a Gartley buy. So none of those patterns are in place right now, but that's what I would be looking for, Jim. So on the daily time frame, to give you the very specific, now price is below its daily profile, it's below Stevie's green line. That's why we can easily go and say 46.43 is the number that I would be looking at. Now let me just take a look at the weekly time frame chart out here, see what messages it has. Let's go ahead and repopulate this. And so when this formed a high out here, right now last week was bar number 8 of a TD9 count, but price would have to close above bar number 5 here. So that pattern looks like if Micron were to close today, that pattern is negated. But if price does close above, this would be by tomorrow, 54.53, which is also my green line level, oddly enough, then you would have a confirmed TD9 count top out there. In this case, it gives you levels to be looking at 41.77, 42.84, and 46.05. Those are its Taz profiles. Prices trading above those levels. If I take a quick peek at the monthly time frame to see what kind of signals we have out here, no real topping pattern whatsoever. This would say as long as 49.23 or 43.27 holds, then everything is in good shape. So no reason for you and I at this stage here to go take a look at a 15-minute or 30-minute chart, because I think we have our answer. And that answer, 46.43.
Okay. I really appreciate it. I watch your show every day, so thank you.
Well, I appreciate that. It's good to have a listener.
Have a good one.
You bet. Thanks so much for calling. That was Jim in Palm Harbor. And Steve O'Son, I'd love to hear from you, too. 877-927-6648. Be right back.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the chart that we're looking at right now, this is for one of our denters who asked for this chart. Jimmy asked for this chart, I believe. It's GASL is the ticker symbol. And that is, I believe that's a 3-time ETF for the exploration and production natural gas companies out here. And the question is it time to go bottom fishing here? And at this stage of the game, Jimmy, I don't have any kind of bottoming signal on the daily time frame out here. So, and I would really be waiting for at least a bearish reversal candle to form. And until we see that, I really wouldn't touch this thing out here. That's what the daily time frame is showing. On the weekly time frame, what do we have? Let me populate this with our tools. Prices moving lower, doing less relative energy. But that itself is until we get a bullish reversal candle, that's not going to help us. On the monthly time frame out here, you know, this is going to help us because it's one of those triples and it does a lot of reverse splits out here. So that's not worth looking at. So, Jim, we're just going to rely on the daily time frame right now. We take a look at this chart, and I don't see any signal of a bottom worth taking. So I hope that helps you out. I believe that Ruby wanted to take a look at lean hogs. Why isn't it taking that? Well, I know what I think I can do. Give me a second here to switch over to this. And let me go to the continuous contract out here. That will still work for what we want to do. And then we can go take a look at. So in the case of lean hogs, Ruby, what it appears to me, first this has a Rhodes momentum indicator top. So we can see that price was moving higher, doing it with less relative energy out here. So we can see that. We get the bearish reversal candle, a little bearish sash candle that forms on December 17th. So we've got the top. Now today is going to be the bar following bar 9 of a TD9 count. That's hogs. Lean. I got live cattle. Sorry. You didn't want live cattle? Is that what you're saying, Bill? I'm sorry. I thought, my apology. Let me see. I screw. Well, let's just finish this off here. Because you might not have wanted cattle, but now you got cattle. And if we do take a look at cattle, so this is really interesting out here. What is it that's interesting? Well, first, the breakout area on live cattle is at the 117.70 area. And now today, you get a little gap down, but today is going to be the bar following bar number 9 of a TD9 count, and it's occurring above the breakout level. So I'd be watching for some type of bullish reversal candle. If you see that tomorrow, well, then what you have, you at least have a potential bottom, and a bottom where you should see at least a rally up to the bottom of the profile in the 123.70-ish area, 124.45 area. You've also got Stevie's green line right around there. So that's what I see when I take a look at live cattle futures. But the real question was, hey, Steve-O, could you actually take a look at hogs? So let's go do that. This is a twofer out here. We'll do really the same thing. Pop up on our screen out here. What's this going to do for us? Not a whole lot. Now, I will share with you, though, the breakout level on this, Ruby, is 67.20. Now, I don't show any kind of a pattern on the way down on the daily time frame, but 67.20 would be a place to look for support on this. Any close below that, obviously support will have failed. It's below the bottom of its profiles as well, so that's its breakout support. The weekly time frame shows that price is just is tested and rejected Stevie's red line. So any close below that, by the way, that close would be 69.25 right now, would suggest a further pullback into the 66.10, 61.56. And if we take a look at a monthly time frame chart here for hogs, it's just trading in between support and resistance. Resistance, which was tested this month, was 76.03, and support is between 57.08 and 61.70. We've even got the quarterly out here. Yeah, we can do any time frame that we want. Nothing that shows up here. So Ruby, that was a twofer. I hope that helps you out, and I hope that was the info that you were looking for out there. Who else has a request inside the den? Let's keep going back and taking a look at the markets just in general, because we just began and I went to a call because we do have call ahead seating out here. So let's do this. Let's go take a look at profiles. What are the markets doing in relation to profiles out here? And so for that, let's just switch over to this chart, a little bit easier maybe for everybody to read. So we'll take a look at daily separately from weekly. Now, what you'll notice here, what you should notice here, is that the profiles that we talked about yesterday, the new daily profiles, those are now in place. And those profiles formed in both the ES, well, both. Formed in the ES, the YM, and the Russell 2000. So your left-hand panel and then the bottom right-hand panel. In the case of the NQ, that's the holdout here. Here's where the strength is. If you're wondering what is it that's holding up the market, well, we would have to say it's the NQ. Why? Because it's the only one that keeps testing and rejecting its daily level of support. What is that? 90.49. What are we trading at right now? The last tick was 90.46. So price is sitting right at support. So I think you watch this, folks. You watch this like a hawk, because if the bottom of that box holds 90.49, you know the expression, if you can't bust them down, price will try to bust them up. Bust them up to where? Well, in the case of the other futures contracts, resistance now becomes the bottom of those profiles. The ES Mini could be a bust up to 33.06. The Dow bust up to 28.979. The Russell 2000 bust up to 16.74. You think I'm kidding? I'm not kidding. I'm sharing with you what the markets are communicating to you and I, virus and all that stuff or not. Now, we don't need to stop there. What's the weekly time frame charts telling us? Well, the other area to watch like a hawk, I would say, would be the Russell 2000. Now, it's a weekly time frame chart, so does it really matter what it's trading at on Thursday at 1:24 in the afternoon? Not really. It really matters what does it close tomorrow. What we have seen is that where price is trading, the Russell 2000, right now it's printing out at 1632. The bottom of its weekly profile, 1635. If the weak link holds and the strong link holds, something to think about. So we really won't know with regard to the Russell 2000 if you're looking for levels of support. Should the NQ bust through its level of support, its daily, well, then all you have to do is just look at the weekly profile levels. Now, in the case of the ES Mini, well, it's traded right into one level of support. That would have been the center of its box. Didn't really get down right to it to the tick, but 32.2850 is that number. You've got in the NQ, it's a bearish structured profile. So if price does give way, well, then you're looking at a move down to about 86.12 from a profile perspective. And inside the Dow, it's 28.050. Not until those levels fail would we consider this to be some kind of intermediate term change in trend. Now, one of the other things that you and I looked at yesterday, and maybe I'm either pathetic or prophetic, and usually it's both. It just depends whether the call was good or not. But we were talking about the New York Stock Exchange, and when we looked at its advanced decline oscillator, what we had suggested was if there was going to be a bottom that was forming, with better bottoms, because we talked about how price got down, the price oscillator, or it's not price oscillator, it's advanced decline oscillator, got down below minus 150. That led to the bounce that we saw on Tuesday, just to work off a little bit of that extreme oversold condition. But what we had shared with you was the better bottoms inside the New York Stock Exchange, they form when price makes a lower low, like it is right now, and the advanced decline oscillator in the New York Stock Exchange is making a higher low. That's panel number 2. Folks, that is more than just something to think about. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 160, S&P down 22 points. Let's go try to answer a question for Ruby in the Tiger's Den. Ruby's question is, do we see platinum resuming the move to the upside after testing last night's low? So let's go see if we can answer that question for Ruby. Let's begin by taking a look at the daily time frame chart. So what do we know about the daily time frame chart? Stevie doesn't really have a topping signal per se, other than an A to B equals CD pattern. So in this case, there would be a butterfly sell pattern on a daily basis that would form. I can't draw that in right now. I don't have those tools on this version of the software, but you can see your A to B. We can see several A to B equals CD patterns that have formed off of the November 12th low out here. So today, Ruby is going to be, or appears to be, bar number 7 of a TD setup 9 count. The actual breakout, the last breakout on a daily basis inside of platinum was at the 9/12/20 area. So what I would do is I would say, okay, there's the potential here, but no bottom pattern. I prefer to have a bottom pattern, and I would say wait for a couple more days. So I would say bar number 8 could be on Friday, and that could be the bottom, or it could be bar number 9. So look at Sunday, Monday, Tuesday. So I'd be just a little bit patient here. Now my profile on this software comes up with 962. It's not that far from my other software, but still the bar count is correct. So this says be patient. What's the weekly time frame chart for platinum tell us? The weekly time frame chart, well, it'd be easier if I just adjust everything a little bit. Whoops. What the heck happened there? Sorry about that. Let's try to move things up. Well, we didn't want to do that. There we go. So now let's just populate this puppy and see what we get out here. I'll click on it, Steve-O. There we go. Okay, so as I take a look at the weekly time frame chart, you know, price continues to find resistance at that's my green line level. So that's 860.10. What that is suggesting is that be patient. Let the daily time frame form a this is worth the daily. What the heck happened there? I'm confused. Now I'm really confused. What the Sam heck? Let me VL. Let me put this in here again. Sorry about that, folks. But every now and then a little technical glitch. Hold on. What's okay? There we go. So now we're back. I don't know what Stevie did on the last chart, but I screwed up. Okay, so here we go. We're on the weekly. Thank goodness. So forget what I just said about for the last 60 seconds. The weekly shows wave number 7. That's letter G out here. Potential for a TD setup 9 count top, but bar 7 we don't consider to be the confirmation of that pattern. It would be bars 8, 9 of the bar following. But price has found support at the 970, or it's tested at least Stevie's green line. So the weekly is supporting, searching for a bottom on the daily, but that pattern isn't there just yet. But watch 974.40 because it closed below that. Ruby would suggest lower price, a further retracement. Monthly time frame chart here shows what? It shows that price has run. First, it shows a nice bottom. It shows the Rhodes momentum indicator bottom pattern. And then what? It shows that price ran right up into resistance, 987.30. Again, a monthly time frame. Take a look at how that's acted as resistance. Take a look at how it's still resistance. So Ruby, that continued move to the upside. Here's a super resistance area, 987.30. A monthly close above that says, yes, things should resume to where? 1179.90. Let's look at a short-term time frame. Let's look at a 30-minute time frame here. And on the 30-minute time frame, what do we have? Not much. So nothing here for me to go off of to suggest anything. We can see that price is struggling at the oscillator and change line. Let's go. That's still the monthly? Shoot, come on. There we go. I apologize. I'm just getting used to some of these tools here that I've developed. Okay, 30-minute time frame. I take that back. So on the 30-minute time frame, take a look how price was pushing lower, doing less relative energy. Price has now bounced up to where? Resistance. 981.50. So now if you're an aggressive trader, Ruby, and you see two 30-minute closes above 981.50, there should be at least be a further counter trend rally. And that could even take you up to the 998 level. So that's what the 30-minute time frame chart is showing. But we're in the bar just started. And so at this stage here, if you're a betting person, you've got to say, look, 981.50, it's been tested. And not only has it been tested, it's been rejecting that level out there by the time the bar has closed. 60-minute time frame, it's 980.90. That is resistance out here. So you'd like to see. So Ruby, does that help you out? In summary, here's how, and I don't know what time frame it is. That's why I was trying to ask, hey, what time frame do you look at? Because here, if you were using a 60-minute time frame, well, a 60-minute time frame, it bottoms with a TD setup 9 count out here. Price gets above Stevie's red line, the oscillator and change line, and now what did price head to? Right to resistance, 980.90. You get to see this, folks, in full operation, especially as we go through these shorter term time frames out here, and you can see how well these understanding your breakdown and your breakout levels are in being able to analyze what an instrument is doing for you. So glad that helped you. Let me just check the phone out here. Now, when we went to break there, we were looking at the New York Stock Exchange, and I would say, look, folks, this is more than just something to think about. Right? Because yesterday we had talked about the pattern in the New York Stock Exchange to know what to anticipate and what to look for. And right now that pattern is developing. Now, this is going to have to be an end-of-day pattern. And I don't know what it will look like at 4 p.m., but that'll be important. Just the mere fact that the pattern is present, even if it's present at 4, is that your signal for a bottom? No. No, you've got to go to some of the shorter-term time frame charts and another reason, and I had looked at this last night, or maybe it was early. It was this morning as I was searching through some charts out here, and it was. And the reason I didn't see it was because I had this chart covering this chart, and so this now starts to get kind of interesting here. So I'm going to pull this open. Oh, did I really delete that? Oh my goodness! I hope not. That's a lot to have to rebuild. Okay, well, if Steve-O did, Steve-O did. Here is. What the heck happened? Oh, Z19. Well, that would be a problem. So let's actually change this to the correct contract out here. That's why that is blank. But what's not blank, wait a minute here. This is grab the wrong chart too. What's going on here, folks? What's going on? Oh, it's this right here. Okay, so this chart here in this set of tools, let me pull this back. So what this is doing on the very bottom panel, it's a little ratio, and that ratio is taking a look at the spot VIX index, and it's dividing, in this case here, by its 1-year counterpart. That wasn't the one that I wanted, so give me a second here. But it may be the one that it was the 6 month. Okay, let me, and I apologize, it's a 6 month. So here we go on this. So what I want you to show, and you can see the green arrow. So it's the same ratio. It's just instead of the last chart was looking at a 1 year. What the 1 year VIX is telling us here is the 6 month. And what's interesting is when this ratio gets to 1, okay, where they're equal, or the 6 month is smaller than the spot volatility index, it tells us of a dislocation. And take a look at all of the different bottoms that form when you get that ratio. And we had one of those first signals came when we had that bounce a couple of days ago out here. So it's something. So what that really says is, look, we began the show and we were taking a look at short-term time frame charts, right? Or not charts, but we were looking at the signals. And one of those signals was coming from the ES mini. So let's go take a look at it. Let's put up the 30-minute time frame. Let this go ahead and populate. Come on, work with. Well, I guess we're going to go to a break. And when we get back from the breakout here, we'll take a look at the ES mini. We'll take a look at its short-term pattern, the Rhodes momentum indicator pattern, where price might bounce to. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go take a look at the Dow Equity Futures contract and take a look at what we know. So we knew that we've taken a look at price, the NQ testing support, the bottom of its daily, the Russell 2000, the bottom of its weekly. We identified the divergence inside the New York Stock Exchange out there. And so we know that prices are pushing lower into support. Here we can see on the Dow on the 30-minute time frame chart, prices have been pushing lower, has been pushing lower with less relative energy. Now, I don't have a bullish reversal candle, but we can also see you've got a fairly wide box out here. Now, a wide box going from the bottom of 28,459 and the top of 28,680. Now, above 28,680, that resistance level, the top of the profile, would be 28,734. That's its breakdown area. So at this stage, price has been pushing lower, doing less relative energy. Price above Stevie's red line, but more importantly, because it's a bullish structured 30-minute box out here. If we see coming in at 2 o'clock, you see a close above 28,532. Chances are that price will try to make its way up to resistance. Resistance 28,680. And 28,734. That's what the 30-minute time frame chart is communicating to you and I. If I go look at a 60-minute time frame chart out here, what do we have? Not much. A retest of a prior area from back around January 27th. No pattern per se, no wave number 7 G, or no Td9 count, or no Rhodes momentum indicator bottom out here, but price is above Stevie's red line on the 60-minute time frame. Let's take a look at the 2-hour time frame. Here we can see price was pushing lower, doing with less relative energy, so we can see the range that it's trading within. Its market profiles, that would be from 28,464 to 28,656. So that's the range for the Dow. Anything above, any close above on a 2-hour time frame, 28,656, and you're looking at a run to 28,855, the level where it had broken down. We can go to the 4-hour time frame out here. The 4-hour time frame showing a Rhodes momentum indicator bottom. That's been confirmed by that bearish engulfing candle, although in essence it's really being tested again, or was tested during this last 4-hour time period. And then a 5-hour basis, what do we have out here? We had a 5-hour basis. What the Dow Equity Futures contract did was it formed wave number 7. That is letter G on the bottom out here, and prices held the bottom of its profile as well. So a lot of support out here as we take a look at those different time frames. What's going on in a larger time frame? Well, with regard to the Dow Equity Futures contract on a quarterly basis, it's actually formed wave number 7. Now that can continue out here, but price is also moving higher, doing less relative energy. A reason to be concerned about maybe some type of larger correction, but the wave number 7 hasn't been confirmed. That takes at least another quarter before that. And that doesn't mean the quarter that ends in March. That's the quarter that would end in June out there. We take a look at the monthly time frame. Nothing wrong with the Dow. Price is moving higher, doing less relative energy. If we take a look at what's taking place this month, even Steven. right now, even Stephen, but prices tested Stevie's green line, and that is held. That is support. If we go take a look at the weekly time frame, what do we have out here? Now, the weekly time frame shows a little bit more of weakness, right? More weakness. I say right. You say, what do you mean right? I mean right because price is now on a weekly basis. Depends on the close, but a close below 28,755, below Stevie's green line, would suggest more of a retracement. And finally, on the daily time frame out here, what do we have? Well, we've got a Rhodes momentum indicator top that's in place. Price is below its breakout level, 28,737 out there, but price is also tested. Now, this is interesting. So on this chart, I get a different profile for the Dow. And you can see that there is an area of support, and it's still okay to use this one. It's totally different than what we looked at, but that means maybe that new profile is going to shift. But 28,501's been tested. We haven't seen a lower low at this stage here. Folks, I'm just suggesting prepare for a bounce. Now, inside the Dow, the bounce level where it would likely run into resistance would be the 28,737 level, old support that right now has become new resistance. That's what I see when we take a look at the Dow. Let me see if we've got any questions out there, because if you did take time to write in, let's make sure that we take a look at those things. And no, just somebody sending me, Sharon Henry says, thought you'd like this. Tap here to claim your special prize. How special, folks, do you think that prize might be? Yeah, exactly. I think Steve-O won't do that. Let's go take a look at some other markets and instruments, see what they're doing here over the course of the next few minutes. Let's go take a look at wheat. Let's go take a look at the March contract for Wheaties out here. If we take a look at what's going on right now, we can see that price has tested so far and rejected its breakout area. That's at 552.75. So a nice TD9 count top on the March contract for wheat. Right now, as of this moment, we're seeing a bullish reversal candle, a hammer candle, that's also communicating. Now, I don't know where price is going to close here, but if you do get a hammer, boy, just telling you how important that 552.75 level is for wheat. That's coming from the daily time frame. It has tested a level of support, and so far you've got a bullish candle saying, hey, I'm going to defend that area. That's what that's showing. We go take a look at, what else do we want to look at? Not hogs, high-grade copper. Let's go take a look at it. What is its message to you and I? Its message is it didn't like those breakout support levels. It's cracked its way through three of them, the last one being 258.50. But today is going to be bar number 9 of a TD setup 9 count. So from a bottom fishing standpoint, we need to keep our eyes here. Look for some type of other signals likely coming from the short-term time frame charts. No reason for us to look at it now. I can tell by looking at today's candle. No reason for us to go look at those shorter term time frames, but pay attention, because there's the potential for a bottom. You just want to look for the pattern to confirm it. If we go take a look at silver, it's having a nice move. What's it doing out here? Well, if we look at Stevie's charts, it's not doing much. Trading in between profiles out here. So is this a bottom? Well, it's got potential, because it has regained its breakout level. That was at 1781. You do have bullish reversal candle at this stage, a three-river morning star pattern out here, but no other real bottom, right? No A, B. Well, let's make sure of that. Let's go test out the A to B equals CD to the downside inside of silver. Well, actually, I can't use that. That would be wrong. Let's use the correct thing, Steve-O. Market's doing all the work for us. All we have to do is just grab the right swing points, and that would be this set of swing points out here. So silver, if it's really making an A to B equals CD to the downside, then that price projection would be about 1707 out here. So what else is silver doing? Well, we can go take a look at the short-term time frames. That's for sure. Go take a look at some resistance levels out here. Now, this is just going to show us our resistance areas, or our TD9 counts. In the case of silver, on a 30-minute time frame, we can see how resistance held. That was at 1804. So 1804 is resistance, 1811 on the 60-minute time frame, and 1809 on the 120-minute time frame. Silver needs to clear those areas. That's resistance out there. Needs to clear those areas in order for it to be able to continue to move higher. That's what's going on there. Treasury bonds, right? If we take a look, well, let me get rid of this silver chart out here. Before we go to break, I'll put the T-bond chart out, see what they're communicating to you and I. T-bonds are saying they want higher price, folks. 162, 25, 30 seconds. Any close above that, and it's well above it right now, says there is no Td9 count top. 163.30 is the next upside price target for the 30-year Treasury. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So here is the chart for the SPYs. And so what I'm really trying to do is prepare you for the likely outcome of a bounce out here. And we're in very choppy markets. Very choppy markets. Maybe we're going to be in choppy markets for a while out here. But if we take a look at the SPYs as an example, and David will give you maybe the better volume metrics during his show, so stay tuned for that. But if we take a look at the SPY on the way down on Monday, the volume there was 84 million shares, if I'm reading that correctly. I got to correct this so we get some commas in there, but I think that's correct. And where we're at as of 2 p.m. is 37 million shares. So mathematically speaking, it looks like the markets are pushing lower with lighter volume. Now, from a swing point really from a swing point standpoint, the confirmation that you'd see that bounce in the SPYs would be a close above 325.12 with less than 84 million shares. But stay tuned. Listen to David. He'll give you the volume on the New York Stock Exchange, see if he's seeing the same thing that you and I are. Now, I'm not necessarily suggesting that there's some huge bounce that takes place between now and 4 o'clock, 4:30, something like that. But just prepare yourself for one out there. Because that's what really the message of the markets is. Again, if we just simply come back and we take a look at what our short-term time frames, were signaling to us, you can see the bottom signals out here. You're just looking at the upper quadrants here for the 30, for the 120, and the 5-hour time frame. And those are the time frames I've selected to show here just to be able to get in all this other support and resistance information, as well as its Chapman wave counts both to the upside and or downside out there. I still completing that tool, but very cool tool. And really it's for subscribers and myself to be able to start searching for those 7th wave moves, at least have the system do it for us automatically. Here is every stock inside the NDX 100. And so it completely populates. So we're looking for those G's. Those are the ones that are highlighted out here. Folks, would love to have you as a subscriber as well. But thanks so much for being here on Thirsty Thursday. Stay tuned. 2 great hours are left. You've got David White coming up next and Tom O'Brien to take us on home. And I'll see you on Fabulous Friday. Have a great afternoon.